All right, let's do this. DayTraderRockStar here with a pretty good video coming up. We got a lot to talk about. We're going to talk about some stocks. We're going to talk about the markets. We're also going to go out here and kind of talk about some predictions for 2017. Again, we are the date of this video right now. We're about a week away from presidential inauguration, and it is Thursday, January 12th. Markets have been pushing up against the highs here. The Dow is struggling with 20,000. And tomorrow, Friday, we have some important earnings coming out in the big banking stocks. So this could be a catalyst to get us to 20,000. Actually, a lot of discussion in the room every day as we get closer and closer. We came within a point of it a few days ago. And, from that point on, we've just been struggling with it. And, you can flip a coin at this point. But I think we need a catalyst. We talked about this on the air today. I actually talked with Paul. We were kind of talking about 2017, what we saw from the, what do we expect from the markets. And I pretty much, always, I went out there and put out my prediction. Paul put out his prediction both ways. Both of us thinking that we end up higher. The one thing I've been following a lot, and I have to remember that I started trading back in 92 to 95. That's when I was really in my novice years, and then from that point on, you start to see things over and over again. You start to see market psychology play out in the longer term, short term, different cycles playing out. This is not then, and a lot of people get into the markets around 2008, that was a very bad time going in from 2002. Again, it was like, we had these bumps in the road, our financial situation, our banking situation, the tech bubble. So these things could be plotted on the, charts. If you go back out, here's your 2008 pullback, 2009 pullback. I like to look at that monthly chart. Here's 2000, tech bubble, 2001, 2002. Then nice recovery back up to 2008. Then we had our financial hiccup, and then from that point we've been rallying. And now we've had a slight pullback, 2016, which just basically went sideways until the election. Now the election here has brought on a whole new interesting, just interesting stuff because. For all these years, it's been politicians and one way of doing things. So right now we got something different, and we've. The market has been going up from 2009. It's been rising. The economy's getting better. But are we at our potential? Are we at our potential? I mean, yeah, we were coming down from, we were in dire straits back here. So, a nice return and a nice push higher. And, over time, that's how the market's always going to react, unless there's something, really definitely wrong when the underlying indicators and the factors that are playing out here. But right now, things are improving, and we have an opportunity now with the new administration coming into the market. It seems to be very business, stock market. I'm not saying focus, but big business. It is big business, and America is a business. That's why we have our budget, and we have everything else that goes along with that, our debt. And this is a big business. So seeing what I'm seeing here and the potential for this new administration to play out, positive, who knows where this market could go? We could be entering one of the biggest bullish phases that we've ever seen in this market. And remember, if you've traded back here in the 90s and stuff, you've gone through some pain, you've gone through some rallies and some more pain. We could go two ways. This could be a big bust. And if it's a big bust, well, then we go through that big wave. If it's a boom, and we come out of this consolidation, we rally for a couple more years. These numbers here, 2,000 on the S&P, different ways of looking at it. But the way I look at it sometimes is it's just, we go back 10 years, what was it then, and go back, and it seems to be speeding up, and the market here continuing just to grind higher. I mean, eventually we're going to be higher. It's about measuring the pullbacks. It's about, timing your entries. But overall, if you get in the market and you keep your money in there, you're probably going to end up making money. So the question we raise here is, what I raise here is, I believe that we're going to be entering this phase, that we haven't had, in our history before, or anywhere that we could really, really mark off. The sky's the limit at this point, and you think you're bearish on the new administration or you're bullish on it. I mean, two ways of looking at it. If you think it's going to fail and stuff, there's both sides of the story here. There really is. So you have to keep an honest and opinion about the thing. Don't try to be anything that you're not, and feel it out. Feel it out. Get a feel for the markets, how the markets are reacting to the news. You'll start to see maybe this starts to really move up here, and move up fast too. Anyway, I wanted to go over some stocks today and not get too focused on the market because I'm doing this just live and fresh right now. Again, tomorrow we have a good shot of breaking 20,000. I'd like to see that. I find that 20,000, it's going to be just a little bus stop along our trip higher. So I don't know. It would be great to close above it. I think we start to leave. I think we get a few hundred points above it before we even start to, see what happens. And then we have the inauguration coming up on the 20th. I think that's next Friday. And that's, a lot of people are looking at it as maybe a buy the news, sell the, actually buy the rumor, sell the news. And this would be the news. This is where the event is. Just like any Apple event, we watch the upcoming event and you see the market rally into it. And then when Tim Cook gets on the stage, the market, or the stock pulls back aggressively because that's the time. The market reacted. So there's a lot of argument. There's a good argument out there that this has priced in. The election is priced in, and once he takes oath and takes over, But I think that's just too easy to look at now. I think that the market moves higher. People are going to start getting a little bit nervous about this market leaving without them. We're going to get a lot more interest in the market. Then we're going to start to see some very bullish phases start to play out, and people are going to start making some really big calls. And then, again, you're going to see more money flow into the market. People are going to start to get their confidence back in the stock market. They're going to get their confidence back in the economy. Rates might rise, but so will, jobs will be available. Things will seem very good. All right, that's the way I'm looking at it. If it goes to all to hell, I cannot be responsible. But come on, there's a big change here. There's a big opportunity. Now, for this week, going into tomorrow, a couple of things I wanted to go over. A couple of stocks. We're just going to do them here. Of course, J.P. Morgan, Wells Fargo, Bank of America, BlackRock, a couple other ones coming out, United Health, all coming out with earnings tomorrow. Some of those are, weighted components of the Dow, J.P. Morgan and United Health. So depending on how well they do, they're going to add some points to the Dow. And we're about 109 points away from Dow 20,000. So that's definitely within reach, especially we have some really good reports tomorrow. I predict we do. I predict J.P. Morgan knocks out of the park. I think they raise their guidance. They beat and raise. And they beat the whisper number. The other banks, we'll see what happens. The reaction on that maybe gives us enough to get to that 20,000. Maybe we hold above 20,000. Be very bullish. We close above that level. A lot of people look for the close, especially around a big number like that. So we have that. But let's talk about the stocks too. The last time we got involved in the ES here was just kind of trading this pullback. With the call options, we did great with those. And since we got up here, we just kind of been chopping around sideways. So I'm happy not to take part in that. Paul's been doing a good job trading the options. It's trading the futures. And I'm kind of waiting for just a better signal to reposition and take some of those, keep those option trades coming to you. But right now, we're mostly in stocks right now. Here's the hourly. And you can see that hourly got oversold and boom. Out of nowhere it went, and there actually was a divergence. It was an hourly divergence, and there was some other things that played out. I think it was a 5-minute divergence back here. It was a really nice one. I was actually to see this one live on the air, and kind of pointed that one out here. You can see we held above that 20 line there. This was really key, and where divergences go, they go up, even close to a double bottom divergence here. That was good enough for a nice rip higher. And this is where we ended up. So again, not that far away. We're tightly consolidated. We have a couple of nice candles. Tomorrow we could easily get some follow through, breakout, big breakout. Even though it's Friday, we shall see. So stay tuned tomorrow, and also tune in tomorrow for that to be part of history. Tune in, Day Trading Radio, on every day, 8 o'clock to 4 o'clock, and even after hours like right now. So let's talk about the stocks. Now, we've recently gotten in and out of, what did we get into? Amazon. We did well on Amazon. Amazon and still looking good, but I'm back into Google. I just want to review that fast. And again, same thing with the market. The market's going up, Google's going up. Market's going down, Google's probably going down. Same thing with Amazon. So this is kind of a play into, into the belief that we break out of that 20,000 and hold up. Anything else, you could be setting up for a little pullback here. But I think we move higher. Nothing wrong with the chart. Long term, it's a great investment. Even though, don't get scared of the price. It's all relative. But the options are doable. They're doable. And if you don't know about options, definitely come by the, the site and snoop around. A lot of options traders here. Google setting up, holding that. Now, DKOF, I forget his screen name. I forget it all. There's too many letters. You know who I am. You know who I'm talking about. He's been pounding the table on Discovery. And Discovery, very nice chart here. Again, underlying 1, 2, 3 channel. Underlying trend line is intact. Top trend line off of that pivot. Decent reversal candle pivot. It tagged again. Pulled back and then bounced off of it. So it's a classic rise in channel. Pull back to the trend line. Oversold stochastics. Like the candle yesterday was actually quite good. This candle was good. I mean, if you're going to look at a setup, it's great to have a reversal candle. And the thing we talk about reversals is, first thing I want as a reversal candle is I want to take out the previous day low, in this case in a buy signal. We just reverse everything when we talk about going long and going short. The same thing would apply going short. You would look for that reversal candle taking out the high and a volume spike. Well, in this case, just to explain it again, if we start to see a candle, we want to make sure that during the day we've taken out the previous day's lows, and then we rotated back up and we're closing near the previous day highs. We could be able to tell this is happening before the market closes. So if you do enough scans and you have things set up properly, listen to the show, you'll start to see reversal candles. And then if you saw that reversal candle, it came on with great volume here, and that was the other key indicator you want to have with a reversal candle. You really want to have this key volume spike, and that follow-through day today was that. And it's no reason why you can't have a big argument that this moves higher. Now these are quality names too. I mean, Discovery, you see a lot of charts, and we've traded this one many times. I haven't touched it down here, but we're talking about the market here, and the market back here 2015 2016 has drifted here on Discovery. We talk about maybe the change of the market here. This could very be a good argument for a long-term bottom here as we start to rotate back up and start to the ramp back up. I've lost my interest in Discovery. It's not as exciting, so I haven't been trading it. One very similar to it in the NLSN, Nielsen ratings. Now this is interesting because, again, I follow this because I'm kind of a techie, and they have to expand into the online world. Nielsen does the ratings for TV shows and stuff, and if you check out their site, very interesting. They track everything from sales and stuff. They're getting interactive, and they're getting and I you know what, you're going to need this type of analytics with online stuff. I don't know if they have. I mean, online stuff have their own analytics and stuff, but I'm sure it's very easy for them being the go-to player, the best of breed, the most well-recognized brand. They could probably do some good deals with these media companies, and I just see that down the road. The research that led me to this, I was looking at the gap down here, and it wasn't the worst earnings report. Had a couple downgrades right after that as usual, and then we came down here. We started putting in a divergence here, and we watched it, and we had a little pullback, and that's where we got in on this little pullback. So moved up a little, was doing it, then we kind of gapped down here for a couple of days. Now big reversal. Now here we have a reversal candle, and this this is exactly what we're talking about before. So we have this low that took out the recent low, Didn't take out this low back here, but this little pullback low. It just took out the recent low. Not a pure divergence, but on the 9.3 up here, you can actually see it holding that 20 line. The volume is there, which is impressive. It's not a tremendous volume, but it's decent volume for this type of move. So I'm looking for this to continue to move tomorrow on a Friday and maybe into next week. Google went over that. The VFC, a little disappointing because this was a good divergence, and I've set my pride on finding these divergences. It hasn't broken down out of the divergence. That's why today when we had a downgrade on it, it broke down, and I said, watch this. It might actually reverse today off this lower trend line. The one thing that we have is that breakdown on the downgrade. We still hold in that 20 line. It almost feels like it wants to head back up. The volume, again, was increasing volume on the downside. It's not, it's a little I'm a little worried about it. But tomorrow's going to be a big day. If we can actually get this divergence and really qualify it, because now we could really see that this low is lower than that low and this low. So it's a really good divergence. So we could actually start to turn back up here, make that higher low. We have a trend line underneath us. We could start moving just like we did back here at this divergence. And we just start to blow right through that and make that bottom. So I'm watching this one closer. IFF, same thing. Never really traded. It's an interesting reversal candle back here that didn't really, it took out the lows, and we were already holding up here pretty good. But this also looks suspect. And the one thing that, I don't recommend doing sometimes is trying to find a bottom in a very bullish market. It's easy enough to find really great stuff and run with it. These couple stocks here today were based off of, just divergences, and, want to make sure that, I want to see this hold. I want to see the divergence. If it breaks down divergence, I want to get out of it. But they haven't broken down yet. They haven't crossed back under. I mean, when that happens, if that happens, probably the damage will be done. But I'm going to give this a couple more days on that one. The VFC also. The Joe, I'm very proud of this divergence, and the divergence was a 9.3 divergence, and it was perfect. Bought right down into it. Understood the divergence, was very comfortable with it, and the rip back up. We took it off for profits, and then we rolled that into, drum roll please, NIB today. Because why? On NIB, not BIB. NIB. NIB, because we had that gap up, and we have a perfect divergence. That candle right here, remember that candlestick, that little tail of the candle is twice, well, it's not twice the length, but it's larger than the candle. It took out that recent low, and we have a clear break higher. All right? And you go out to that weekly chart, you have a huge support line back here from 2012. That is impressive. So, I mean, we could get a very nice bounce. I don't know. I'm not, up to date on what Coco's doing, El Nino. I don't know how that's going to affect things. I don't know what the season is. But technically speaking, we got two of the biggest things. We have a huge support line, and we have a divergence. So I'm riding with it. That is an HPS setup. Now, we didn't take, it actually came down. I think it triggered its HPS stop. I wasn't in it, but I'm in it now. So I want to reactivate that because it wasn't, I think it was a very tight stop. Let me say, yeah, both of those, NIB and the VFC. Let me show you what I'm talking about here. Now, these are HPS setups. And I think that this was a, we're right on. I like it down here. The stop was a little tight here. Look what happened. We just came down. I think it tagged it for a second. What was the low here? 26.50. So it tagged 26.50. So it must have tagged it to the penny right there. That's and then it ripped back up. All right, fine. It happens. I can't control that. But everything telling me that this is nice divergence. Looks fine. Continue to hold it. I would reestablish that stop. All right. Keep that stop now. That's what I'm going to do when I'm actually activate that now. To reactivate that. All right. So that's that. And then the Joe, the BII, the NIB, and then the Colgate Palmolive. Had a nice move today. Still like this one a lot, but it's a boring stock. We tried to break out. This was a divergence that we called for a breakout, but the breakout ran right into a little resistance. We also had that 60-minute time frame, I believe, was just rolled up. Yeah. And we came right up to that trend line after we broke out off of that divergence, pulled right back, got oversold, got a bounce, still chopping around. There's a big channel that we have, and I see no reason why we can't get back up above that channel. There was a good day today, and look where we are in the daily. Daily's just about oversold. Already got that bounce. So getting a little momentum follow through would turn that back up. We have a few days to break out of that. So, yeah, definitely like the Colgate. And that's going to be it. That's our update going into tomorrow. I'll have the new watch list out tomorrow also for the members of Day Trading Radio, which will contain a couple of these and more updated alerts and stuff. All right, so that's it. And have a good day tomorrow. Be safe. And, I was going to ask predictions. If you want to make comments on this video, what's your prediction for this year? Today I actually said I think we can get 10 to 20% in the S&P this year, but more towards the upside. Possibly even more. That's a big call, but make your call in the comments. Make your prediction. Make your prediction. If you do get close to it, I'll do something very special for you. You get a free membership. But that's not going to be until the end of the year, 2017, to see who's right. Voting has to stop in October. Or maybe even, no. Voting will stop next week. All right. Everyone have a great evening, and I'll catch you in the markets.